Good morning, everybody. It is Thursday, March 21st. I'm Jane Johnston with the Briar Hill Group at RE/MAX Camosa, and I'm here with...
Hi, everybody. Andrew Plank here with the Vibe Real Estate Group and Royal LePage.
And...
Jen Lowe, mortgage broker with DLC Modern Mortgage Group.
Okay, your
Welcome,
sounds a little off right now. I'm not sure why, Jen.
Oh.
Have you got a microphone?
Test.
It
Just like your mic.
I can hear you, but it just sounds a little off.
You're not your usual self, Jen.
Oh, yeah.
So Jen is now a weekly, she's joining the show. Jen is part of the show now. Yay. Jen. So she's going to be self-introducing from here on.
Actually, why don't we start with you? What's happening in the mortgage market?
Well, as long as am I sounding okay?
You're a bit low, but anyway, it's okay.
Okay. We're seeing inflation came a little bit lower, 2.8% for February. So what's going to happen with the bond yields? Well, when I was looking at them yesterday, they're down a little bit. So hopefully fixed rates will come down.
And when do you expect that to happen?
The fixed rates are changing right now. The variable rates with inflation coming down a little bit like 2.8% when they were predicting actually that it was going to go back up to 3.1. That's going to put more pressure on the Bank of Canada to reduce the overnight lending rate, perhaps in April, but definitely looking like June is going to be when rates will hopefully start coming down.
We've been kind of anticipating that they don't want to reduce rates while we're in the spring market, and that's just us sort of speculating, but this could change things then.
It could. I mean, and they're just holding off so much because they don't want there to be a big burst in the market. But all the reports come in and they're giving the numbers that, okay, well, it's time. It's time for rates to come down. So
it really is.
And it is interesting, even with the effect on the inflation rate, with it coming in lower, then watching the bond yields and seeing them dropping, we're seeing, the fixed rates coming down as well. So
with those folks that are on variables and are kind of like, they're maybe going, oh, shoot, I've been on variable now for a while. At what point would you say it makes what should they be watching for in terms of maybe locking in at some point? Is it too soon to talk about that?
It's tough because every situation's different. The fine print on, yes, you can lock in at any time with your variable rate mortgage. It's what rates would your bank lock you in at versus what rates are other banks offering for brand new clients.
Right.
So it's kind of a case-by-case basis for when it makes sense, as well as you can't lock in. If you're 2 years into your 5-year term, you can't lock in to a 1-year term. You would have to lock into a minimum of a 3-year term.
Right.
So seeing what the banks are doing with their posted rates, which usually no one pays attention to, but they're key on what your lock-in rates are, as well as what your penalty would be to get out of your mortgage.
So kind of, I guess the fallacy of going variable rate is that, I can lock in at any time, but when you're locking in, you're really locking in at the current rate, the posted rate, oftentimes. And of course, if it's a couple of years into your mortgage, now it's a 3-year term instead of a 5-year term, which tends to be more.
And that was the challenge in going through COVID, when rates were going up and up and up. What the lock-in rates were always just so much higher. It just didn't make sense. But we weren't in the know, and no one knew that rates were going to continue to climb as much as they did.
Right. So locking in at a rate that didn't make sense actually would have made sense.
Yes.
In hindsight.
Hindsight for sure.
Yeah.
I know that you and I talked many times about me locking in.
Yeah.
and it was very frustrating, right? Because
Mhm.
you never knew. Anyway,
Yep,
who would have known 7 rate hikes later?
exactly.
Hmm.
When we
But
were
we
always told this is it. It's not going to go up anymore. Okay, well, nope. I mean, myself too. I'm still in a variable, so I'm just waiting for the day for rates to come down.
Okay, so let
And
me ask you
looking,
a question on whatever, at the end of this year when rates are down, are you, and let's say you're coming up for renewal, would
Yeah.
you lock into a fixed term?
If
I fixed.
I go with a fixed term, I would not go for more than 3 or 4 years. I would not lock into a 5-year fixed right now.
Mm.
Because we locked in just before COVID uh, on a place that we bought the day COVID, the day that everything closed down. Thank God we were on fixed. Oh my
Right.
God. Anyway,
And in people that do go with a 5-year fix, sometimes it's that your qualifying rate, because your 5-year fixed rate is potentially less, your qualifying rate is less. So sometimes that's the only option, but I'm definitely recommending 3 or 4 years right now.
Mhm.
so recently a friend of mine shared with me that there were less foreclosures than anticipated across Canada because of that 2% qualification stress test.
Oh, the stress test. Yeah.
Is that true?
How could it not
I've
be?
heard that there's been more mortgage defaults. I don't know where we're at with foreclosures, but most definitely having that stress test over the last, since 2018, I think was when the stress test came in, would have made a huge difference.
It would create a good buffer for people who, if it hadn't been there and had been qualified and bought places for a higher price point, would definitely be further behind than they are today.
Yeah.
So yeah, we had someone doing a presentation for our brokerage, and they were talking about historic interest rates and the fact that where we're at today is actually, you know, overall affordability and interest rates and so forth. Um, we were really unnaturally low for the last little while. We're probably not going to be seeing an interest rate environment that's going to go back to anything that we were seeing during the COVID time. And so we're going to have to kind of get used to that fact that even though we are hoping that interest rates will drop a bit, they're not going to drop to where we saw them before.
I totally agree. Yeah, like around that 5% mark when I first got into the market in 2001, it was just over 5% was my interest rate. And I
Yeah.
feel like that's,
And
that's,
that was a good rate,
yeah,
you know?
yeah. That 7-8% is getting really,
Yeah.
Average price on a home was 250,000 though, you guys. So
yes, yes,
It's true.
it's different.
big
But
It's
difference.
true. Well, there's so many factors, you know, and when you talk about like, you know, quantitative easing and, you know, adding money into the pool and the valuation of the dollar and all of that stuff and wages, like there's so many different moving parts that, you know, a house bought in the 50s for $50,000 is not that wasn't the same money that we're dealing with today.
yes,
Yes.
So,
exactly.
yeah.
I did, although
Um,
I did recently have a client who bought their house in 1957 for $12,500, and she still had
yeah.
the certificate.
Isn't that awesome?
Oh, wow. Huh.
And she sold for over, we listed at 999. She sold it over $1 million, and she was just awestruck.
I had an elderly seller and we listed just under $1 million, and I tried to get her to reduce price because we weren't getting activity, and she's like, no, I want $1 million. I want $1 million. And I think, you know, that generation, $1 million is so much money. It is a lot of money, but to that generation, it represented being a millionaire and so much money. And today we look at billionaires, not millionaires, and it's just such a difference. But for them, it's like that.
Yeah.
Achieving that is such a goal, such a life goal. I'm a
Awesome.
millionaire. Yeah, I
We
love
do
it.
good things.
We do.
Okay, let's talk about the market. This is March 21st. We're going to do our little market stats, and then we're going to talk about what's happened with the National Association of Realtors in the U.S. So, first of all, if you do like the show, please like us. Yay! We love it when that little thumbs up comes up, especially on the show. And don't forget to subscribe to us. We both have YouTube channels, Andrew and I. And comment, please, if you have anything you want to share. We'd love to hear from you.
I learned the other day at I was at a realtor networking meeting, social meeting, and I was chatting with one of the younger realtors there, and she said she listens to us every week on Spotify. She picks up our podcast on Spotify and just listens, and she says she does it religiously, and she loves hearing the things we have to say, and she's always learning something from it. So that really felt good. It felt really good to know that, we may not, that we have an audience, that we have people who are listening and taking value from what we're saying and learning. So anyway, thank you folks for that. That feels really good.
Kayla mentioned that I was one of the people she followed before she got into real estate. She just realized it.
This is Jane's business partner, team member, Kayla. It's funny.
Okay, Andrew, take it away.
Okay, so today is March 21st. We have had 322 new listings go live in the last week. That's a good number. We had 138 properties go pending, so a little less than half. We had 100 price decreases. That's quite a few. We had 5 price increases, 3 back on markets, 110 sold. 56 expired properties are expiring. That's good to note. And 3 properties were withdrawn from market for whatever reason. Now we don't have last week's stats, but we have the week before. That's because I did the thing last week and I didn't take the stats. That's my fault. So I'll take this away too. So compared to last 2 weeks ago, similar number of new listings, 326, 322, a little less, but I mean, nominally the same. Pendings, very similar to 134 versus 138. Price decreases have increased a bit, but again, pretty similar. So all these numbers, it's almost like looking the same thing. I'm really I really expect we're going to see a lot of new listings come on after the spring break. Okay.
So one of the an agent in an area where I live called me up and he was saying that he's doing another price reduction. He's done 2 and nothing's happening. And I'm like, sometimes you just have to wait because the buyers just aren't there yet. So you got to really go with the flow. Sometimes I remember when I first got into real estate doing an open house on Mother's Day. And I'm like, why did I do that to myself?
Yeah.
People are just, their focus may be on elsewhere, especially during March break.
Yeah, especially during March break and changes in the weather. We've had some beautiful days in the last week. People may be more interested in getting out and seeing the beach than seeing a house.
Yeah. Okay, so month to date so far, we have 299. That's compared to 590 for March of 2023. And new listings, we're at 784 for March so far. That's compared to 1,118 for March of 2023. We are only halfway through the month, so I expect we're going to actually go over where we were last year. And our total active listings are
2/3 of the way through the month, Jane.
2/3. We're at 2,588. So this is the highest it's been in many years, actually. And that's up over last year where we were at 1,970. So we're doing well.
I can say that I have so many buyers right now that I've got some listings coming live. They're looking to buy after they've sold and actually concurrent with selling. We're out looking now. I've got people who are actively, waiting to find something before they sell. There's a lot going to be happening once we hit April.
Yeah.
I can just tell. Yeah.
And I was at a show home the other day talking to the listing realtor, and he was saying there are lots of subject to sale offers on those show homes. So
Mhm.
so new construction is more likely to accept that because they have more than one property to sell. Let's say they have like 10 or 12. And so they'll take a subject to sale because they can just sell another unit.
They know they can
Not,
wait. They know the sale will eventually happen. And the market needs this in order to move forward too. I mean, a lot of people are locked up. They can't buy until they've sold. And without the ability to do subject to sale, it doesn't free up more inventory. Because people won't be listing their home unless they can buy something. So that subject to sale really actually helps to keep things moving and make the market more fluid.
right.
And
Okay,
then
so
they know exactly how much they have to work with to
Yes.
payment, etc.
Yeah. And Jen, you've been really good with, people who are looking at maybe creating a scenario where they may need to know what if they did keep their home and not sell it, what they could keep it as an income producing property for and get qualified based on keeping it. And that's been a wonderful strategy for many of my buyers who allows them to go buy a place now and then sell their place later.
Right.
yeah, well, it gives them peace of mind as well, knowing that there's
Knowing they have that option.
Yeah. If only we were so smart 18 years ago, eh, Andrew?
Oh my God.
Okay, tell us about the NAR decision.
Oh wow! I mean, it's so it's been brewing for quite some time because was a class action lawsuit that came about, and I think the first we heard about it, I think Remax had made a settlement with this class action lawsuit, and some other large companies had started to make settlements. And the latest to make a settlement, and this is big, is the National Association of Realtors in the United States. And this, I mean, go and read read this and so forth. I guess the point we want to talk about today is there's a lot of misinformation out there right now in regards to these settlements. There's a lot of the media has been sort of picking up and regurgitating a lot, some blatantly wrong information. But the idea was that the allegation was that the agents as a whole, as an organization, were requiring sellers to pay more commission than was necessary because they were alleging that sellers were forced to pay a commission to a buyer's agent as well as their listing agent. And I would argue that's not exactly the case, but it is really important that we educate our clients when we take a listing. And in the US, our friends in the States are different than how we operate in Canada, and how we operate in BC is how we operate different than how somebody operates, let's say, in Ontario. But as a general rule, the way the industry has developed, we as a listing, when we take a listing, and there are so many different business models that could exist, but a pretty typical model is an agent lists a home and they offer a buyer's commission to an agent that brings a buyer as part of the gross commission that they're charging. And anyway, should we share screen? Do you guys have any comments on this?
Well, so one of the issues is there's to be a couple of issues. First of all, generally when people list a property, they include the buyer agent commission because then the buyer can afford to pay more money for the property. So if a buyer agent is required to pay for a buyer agent commission, in addition to the purchase price, for every dollar that they're spending, they lose a spending power of approximately $4 more. So if it costs them $15,000 or let's say $20,000 to work with an agent for a multi-million-dollar property, then their purchase price is decreased actually even more than 80%. So that would mean $80,000 simply. The other thing is we do have this happening here where people negotiate their commission in BC, where we have low fee realty listings, and a lot of realtors feel uncomfortable listing in are going and approaching sellers in this case. And the reason is because it's kind of a conflict of interest for a realtor to negotiate their commission at the same time they're negotiating for a buyer. So what will have to happen is we will have to move to buyer agency. And I've put the link in here for the article. And one of the things that they do recommend here is, oops, I just put it in again, sorry, is that they will enact a new rule in the US that they will have to work with written agreements with buyers so that agents working with buyers will actually know how much money they're making, which is not the case right now, you guys. We do a lot of work for free. So
we do. I mean, I just had a question from a seller, for example, and about, hey, what happens if my place doesn't sell? Do I owe you any money? And currently, the way that my contracts are arranged, no. I work with the seller. We sign an agreement. There's a compensation that is payable once we have a firm and binding. Once we actually proven a sale. If the property doesn't sell, there's no payment. Buyers agents are often working on the same premise and oftentimes don't have. It's so important that we disclose and discuss with our clients the various forms of compensation and the ways things can happen and what our expectations are, and overall how the industry kind of works. But how the industry has worked has generally been that we rely on that a buyer's agent relies on some compensation from a seller, but it's not a given and it's not a requirement. So, yes.
there's also the point that a buyer's agent, I mean, in our team, we have a loyalty discussion with buyers, and we talk about, that we're going to be working, but we really get paid at the end of all of this. And so sometimes buyers just don't complete, or they perhaps decide they're not going to go where they want to go, and we end up not being the agent. And so we end up doing a lot of work for free. So this could change into one format where it ends up buyers and their clients, buyer agents and their clients end up having a fee agreement with them, that they pay their agent a fee to work with them. And the other is that they have permission to negotiate on the purchase at the time of purchase with a fee agreement before they submit the purchase. That's what's recommended by the lawyer I talked to yesterday.
And that's generally like how we've done buyer's agency agreements in the past is, this is what I intend, this is what I expect to get paid. And if we're working together, this is what you will pay me if we buy a place together, whether there's a cooperating commission owed or not. There's still no provision. Again, there can be, but generally buyers won't agree to a provision where they're going to pay a certain dollars per showing, or some retainer, or anything like that, because they could be looking at 50 properties. They could end up not buying something if they get priced out of the market or determine that Duncan is more affordable for them than Victoria, and so forth.
Yeah, and at the same time, the agent is making an agreement on the services that they're going to provide the buyer. So it's not just one way, right?
No, absolutely. This is why the communication and the disclosure is so important, so everybody understands. Not everybody wants to get into it, and a lot of people don't want to discuss compensation. Yes, it is just doing its rounds. They don't want to discuss compensation because it's an uncomfortable topic, and not everyone understands how to prove their worth or discuss their worth. One of the topics of conversation that's come up in through this is what happens if the onus on paying for a buyer's agent is put onto the shoulders of a buyer, and if that's the case, if we go into an environment where let's for example say that sellers are no longer paying a buyer's agent. A listing agent makes a contract with a seller, and the only provision is for the listing agent to get paid if that property sells, which is essentially what used to be and is an exclusive listing, except it's on MLS. But if that was to be the case, then the buyers are going to need to mortgage or come up with that money out of money they would be putting as their down payment or so forth. And the current climate, and Jen can speak to this, is that lenders aren't going to pay a buyer's agent.
No, it would, I mean, and again, hypothetically, I would think it would increase the amount. Like right now, we have to make sure that clients have money for their closing costs, and that includes the lawyer fee, that includes property transfer tax. So if there's a realtor fee in there, we would need to make sure that clients have enough money separate from their down payment to cover those costs.
Right.
One question, if a client is or if someone is selling a property privately, and as a realtor you go in to negotiate for a buyer, under those circumstances a fee can be charged.
Negotiated. Yeah.
It's just because it's disclosed. Like I've seen it in contracts that it's disclosed in there. And so is that similar?
So generally what we do is we do a fee agreement, but when we're working with 1%, they often include the commission in the contract as a clause. And I'm not sure why they do that, because we're not a party to the contract, but they're making us a party to the contract. So that's what the lawyer was saying. But often I always tell people, like, if there's a for sale by owner and I'm going in representing the buyer and the seller says they're willing to work with agent, generally what we're doing is we're not offering agency to the seller, only the buyer, but we will facilitate the processing of the transaction to make sure that our buyer is successful.
We actually end up doing a lot more work when it's as a buyer's agent. If we're working with someone who's unrepresented as a seller, we end up doing a lot of extra work as we kind of help to manage that whole transaction through to finish line. And there's nobody on the other side to ask the seller certain questions or to get information you may require, or to sort of manage those things. And we don't represent them, but we do have to work with them.
And it is a good idea to have an agent on each side, because we really are a check and balance for each other. So sometimes, like, one agent might say something and the other agent is like, I don't think that's right. Let's check it. And it's quite a collegial process to make sure that it works for everybody. So having your own representation is very important. I was watching a show last night. It was the head honcho from Real, which is a real estate brokerage that's mostly in the United States. They're just come into Canada. And he was explaining it. And there's a lot of misinformation going out, but this is the third or fourth time, if it happens, that agency and disclosure of commission and all this stuff and how we work is going to be enacted in the last 18 years that Andrew and I have been in real estate.
Right. So from historical perspective, before we got licensed, there was a regime where if you listed a home with an agent, that agent represented you, the seller. And if a buyer contacted an agent and said, can I view this property? That agent didn't work for the buyer. They only worked for the seller through this regime. And there was no buyer's agency at the time. Buyers actually were never represented in the, 80s and 90s. They actually thought they were, because they were working with people that they
if they had a buyer agent,
know and like and trust.
The buyer agent working for the seller.
But the agent worked for the seller, and their representation was for the seller. And so that changed. And then we went to a brokerage agency where you could bring a buyer to another brokerage, and you could represent that buyer and they could have their own representation. But we couldn't bring a buyer. Well, we couldn't be in a dual agency situation with a buyer within our brokerage.
And we were with a large brokerage. And so a lot of listings were with our own brokerage. So then
that worked against us.
We were in dual agency all the time, even though we were only representing one half.
Yeah.
of the
So
transaction.
So the way the industry has evolved has been really beneficial in many ways for buyers and I think for sellers. But we're looking at maybe another evolution, and that might be where we go to required buyer agency, as opposed to, I mean, I would say 90% of agents in Victoria anyway operate without a buyer's agency agreement. We have buyer agency through implied agency, but we haven't created a formal agreement. We haven't had the formal discussion around how compensation works and how we get paid. And we are not empowered to go necessarily to those for sale by owners or to where there's a model where there's a lesser commission than we are normally operating on. We're all business people. We have certain expectations on our compensation and how we're going to be benefited by what we do, and how much time and energy we put into working with someone is related to the commitment they're going to give to us and the expectation of remuneration. It can all evolve. It can all change. There's no set fees, you know. And when we say, like, it's funny, I just got asked yesterday about negotiating on my commission on a listing, and I said no, I'm not negotiating on my commission. And yet we always say commission is negotiable. It is, folks. You can choose another realtor. You can choose another model. It's absolutely negotiable. But just like if you go to the grocery store, you might find a can of beans for $1 and a can of beans for $2. You're probably not going to find a can of beans for free or for a quarter, you know?
But the other thing is you're going to have better quality beans generally the
Yes.
more
Yeah.
you pay for. So, you know, it's funny.
Do you want organic beans? Do you want grade A or grade, you know?
So recently I was talking with a seller about listing their property and just about how to pick a realtor. And what I said was, you know, go with a realtor who you are in sync with and who you jive with and who you're going to get the most value out of, who's going to continue to pay attention and keep in touch with you, rather than go with a realtor who you think is going to get you the most money, because it's the market that determines the price that you're going to get. It's the marketing that brings in the buyer. And just right now, you know, with marketing right now, it doesn't matter really what you do. If the market's a bit slow, it's a bit slow. It just is a bit slow. And so having somebody who understands where your property sits as a listing agent is important. And the same thing as a buyer agent is, you know, as a buyer agent, if you're working with the buyer, you may say, the market is fairly slow. Look, we have a lot of opportunity. Buyers usually tend to go, I don't want to make a decision right now. To their detriment, I think. They wait till another offer comes in and then they end up in multiples, which is great for us because we make more money for the sellers. Do you want
As a
to
listing agent.
go back to your article, Andrew?
Oh, I guess, I mean, let's see how long this is. It's long. Oh, and then we get that pop-ups. What might change in the real estate industry? Let's go to that. One concern is that by making it easier to sell, for sellers to opt out of making a cooperative compensation offer to buyer agents, some buyers will opt against hiring an agent or only doing so toward the end of the process, after they've gone through most of the home hunting themselves. This could end up weeding out some lower performing brokers, Kling says. I mean, okay, I want to comment on that because that's lower no brokerage commission. Buyers are now maybe saying, I don't want to pay a broker. This was happening actually in our industry. We had a situation where some of the discount brokerages were saying, listen, buyer, you go to the open houses. Don't bother me. You know, go to the open houses, call the listing agents, find the property you want. When you find that property, then call me. I'll write the offer, and I will not charge you a lot, or I will reimburse you some of the commission that was being offered through the listing brokerage that was offering a higher commission.
Yeah.
And then our industry, some people started saying, well, okay, if that's going to happen, we want to encourage people to work with buyers agents. So we're going to lower the cooperating commission for those agents that are using that strategy. Now, that's the same thing that they're talking about here when there's not, when buyers, and it's on the buyer's shoulders to pay for the buyer's agent as opposed to on the seller's shoulders. Buyers may choose to do their own running around and finding the property, which will then put more strain on the listing agents who will be, I mean, for them, I guess they're getting calls, but they're getting, can you show me this property? Can you show me this property? Can you show me this property? They may need to charge more to their seller for the additional service that they might have to provide in that case.
So what happens in the Lower Mainland is they have a different lockbox system than we do, and some agents they have what's called a day code, and they send the buyers through the listing without them attending. And so this is, I guess, a precursor to what this may end up looking like. Is they end up first of all, the buyer's going through without anybody supervising them.
Wow.
Secondly,
that's happening.
The buyer agent writes an offer without seeing the property, so they're not informed on the property. And then you have, if like, where's the value of an agent? So this happened recently on one of my listings, and the buyer agent's like, well, do you have a day code? And I'm like, no. And then I found out that for the inspection, he was planning on sending the inspector and the buyers through without any representation.
Without attending.
Who's attending the inspection? He said, oh, the inspector and the buyers. And I said, like, thank goodness I asked the question, because I just realized, the way this guy is operating is different than we do here in Victoria. He was a Vancouver realtor. He's like,
we definitely have different cultures of real estate, and every place is different. I'm really happy with how we have it here, because it feels like our level of professionalism and collegialism is high. And I would hate for that to change, but I think it's in the best interest of all consumers, the way that we do it. But there's always room for improvement, and I'm open to change. I'm absolutely open to change.
So here's the other side, though. I posed the question in a realtor chat group. I'm like, what do you think about the situation where somebody is not from Victoria asking to be shown properties? The agent is asking us to show their buyer. And so a lot of people are like, well, I work for the seller, so I'm going to do the best. And I'm like, yes, but if the buyer wants to write an offer, how is the buyer going to be represented?
That's a conflict.
Is that a benefit to the seller to have an uninformed agent writing
Absolutely is. Actually, it is. I mean, it can be worse, and it can be better, because you could have a place that is overpriced, and the buyer comes through, falls in love, and the listing agent or the buyer's agent says, I'll just write the offer, and they've got no connection. And it's unfortunate for the buyers who've chosen to work with an agent who's not going to represent them, but they may not know any better either. Well, they may think they know what they're doing.
One of the agents who had this way of dealing with their clients, they would offer a rebate if the buyer just said, I want to write an offer on this property. The agent would just give them money back.
This is all entirely kosher. I mean, the thing is, and there's also the other side of it. Sellers can list their home as a mere posting without any agency representation as well. And we can bring, we can have buyer's agents could have a buyer's agency agreement, have full representation with our buyers, and go through a home where the seller is maybe not savvy or knowledgeable about what they have. And it's up to the consumer to choose the representation and education and support that they're looking for, and pay for it. Like, you get what you pay for, but it's all right.
So this guy wrote an offer on a property that he never viewed, that had an oil tank in the basement and inside the house. And of course, it came up that they couldn't get insurance for the property because of this oil tank inside the house. So, and you know, recently I just did a market analysis for a property, and she's like, "Well, I have an inert oil tank inside my crawl space," and I'm like, "It has to go. It can't stay there." So this is like the value of having a realtor. And Andrew's right. People can pick whatever they want. I mean, they can go shopping at Walmart, or they can go shopping at the Bay, or they can go shopping at, I don't know, Nordstrom's. But
Shop
you're
local, folks.
The
you're
value.
gonna, you're gonna see the value based on, and I went to Walmart a lot, just saying. Especially when I had young kids. It just made sense, right? Like, do what makes sense for you, but just make sure that you're well protected. So, do you think NAR is going to come this way, Andrew? This NAR decision?
Well, the NARDIS is, yes, absolutely. I believe that, I mean, there's huge money in this class action lawsuit. There's, I mean, some of these settlements, I think it was 419 million. I don't remember the number exactly. Hundreds of millions of dollars that the NAR decision was. And a lot of the other brokerages have made their own settlements of 50 million here and however many million there. Sid, you're really getting, dude, come on. So there's a lot of money, and I know that they're looking at Ontario. I think Ontario is really concerned about this. We have, I think, because we have regulators and have been a little bit, I think, ahead of it. BC may be a little bit insulated from some of this, just because we already have a lot of really clear rules around representation and brokerage and so forth. But that doesn't mean we're immune, and it doesn't mean we don't have to defend, and it doesn't mean that the industry is not always changing. There's always something new. I think the main takeaway, though, I want to talk about today is if things come about and change, will it mean a savings to the consumer? Possibly. I think it might mean more of a rejig of where compensation lands. At the end of the day, if we end up with less compensation, we're going to end up with less quality of representation. And that's just a given. I think we're going to see less realtors in the industry, but the realtors who remain are going to have a higher level of professionalism. And we're going to have to be really, really clear in all of our agreements. If we're going to choose to work with someone who wants to view, 50 properties over 6 months, we need to be clear on what our compensation is going to be for that.
I agree that we're going to have more professionalism. We're going to definitely have buyer agency. Buyers are going to have to meet with people and determine what kind of work they're going to be doing with their buyer agent, how the buyer agent is going to be representing them, whether or not they're going to be around for all showings, how they're going to negotiate for them, and what service do they provide, not only during like the process, but after as well, if they're going to be taken care of. I think that'll be the differentiator. As I said, we've already been through this a few times, and everybody gets upset, and then the dust settles, and we have
get
to
on with
adapt.
doing business. Yeah,
It
gets on to doing business. I think that again, if it turns out that the cost of buying is put on the buyer's shoulders, that's a real big change, because it affects their ability to get a mortgage, because it puts them that much further behind on being able to save up for a down payment, as Jen was saying. And that's a negative for buyers, and it's a negative for sellers in the same way, because it means there's less buyers able to buy.
Yeah.
I think it's really important. One of the main changes that the NAR has agreed to in this settlement is they've agreed to remove any reference to cooperating realtor compensation on the MLS listings. So agents won't know how much or if they are getting paid when bringing buyers through properties based on MLS listings.
They're gonna probably do a fee agreement with the sellers before they even show the property.
which creates a whole bunch of extra work. I mean, okay, I've got to show 5 properties today. I need to organize 5 fee agreements before I start showing. I think what has to happen is again, we're going to go to, if not mandatory buyer agency, we're going to go to best practices. Get buyer agency before you get in the car and start showing properties to buyers, because then you know you've had the conversation on compensation. Your client has agreed to compensate you if you buy a property. And if there's a seller compensation involved, it will reimburse the buyer for part of it, but it's not a guarantee.
And the mortgage companies may have to adapt as well to start including it as an extra, because, maybe they'll have a rate or whatever. Maybe it'll be the tail wagging the dog. I don't know.
Yeah, I mean, it's funny. Go ahead, Jen.
No,
okay.
I mean, it'll be interesting to see how if it all plays out. And
currently, let's say someone lists a $1.5 million property. They charge 3% commission. Fees are not fixed, folks, and it could have been anything, but let's say 3% commission, and of which 1.5% is offered to a buyer's agent. But that's 3% that is going into coming out of the proceeds of that sale. If we go to a model where buyer pays 1.5% and seller pays 1.5%, the same amount is getting paid, and the same amount is going on the mortgage. In other words, the lending company is still paying the same amount of commission. Like currently, commission is paid by the seller, but it actually is paid by the buyer as well, because they're paying a higher price for a home than they would have if there hadn't been that fee. If they're paying that fee out of their own pocket, they're probably saving 1.5% on the purchase price. And so that purchase price is 1.5% less, but they're coming up with 1.5% out of their own pocket. The lender is currently paying for it, whether they incorporate it into the buyer side or the seller side. But the lenders don't allow the buyers to pay for it in this case.
Okay, so the assumption here is that they're saving money if they pay the asking price, but the value of the buyer agent is negotiating money off the asking price.
Well, or helping a buyer identify that the asking price is fair or a really good deal, or out to lunch and maybe you should move on or try to negotiate.
Yeah, shepherding them through the process.
Yeah, and shepherding them through the process. We can't always negotiate money off the price, but our value is in helping people to identify whether or not they're paying a fair price, whether or not they've negotiated a fair price, whether or not they've negotiated a great deal. What are they trying to do there? Yeah.
It's like taking all the lawyers out of the court system. It'll be interesting to see. There's only going to be litigators who are working for the what do you call it? Like one side. It's so
what's funny is, these class action lawsuits, there's one lawyer, I think, or the lawyers are making huge money on this. And, they're on, like, their fees are way more their fees are way higher than any realtor fee. But they're spearheading this. Anyway, that's a whole other interesting matter. Anyway, I think we can move on from this. I just wanted to sort of bring it up. And if you haven't looked into this, the one piece of misinformation that's been bandied about in a lot of the articles is there is no fixed fees, and they were referencing that sellers in the States were paying a fixed 6% or being forced to pay 6% seller homes. And that's entirely not true. And the national organization has rebutted that quite strongly. But other than that, it's good reading, and check it out.
We aren't allowed to discuss commission, folks. So just so you're aware. I just want to highlight a listing that I have. It's on Cactus, 3842 Cactus. It's a 3,000 square foot house with a 4-bedroom, 4-bath in Machosen. If anybody's interested, this is a gorgeous property on an acre in a great neighborhood. You know how I know? It's my neighborhood.
Mm-hmm.
But if you're looking for a rural property, Andrew, do you have a listing you want to share?
We've got a great listing on Linwood, 6 beds, 2 baths. So it's great. Sorry, 5 beds, 2 baths, but it's great if you're looking for an income property because it's very flexible. The downstairs is 3 bedrooms suite, but it could be locked off, and 1 or 2 of the bedrooms in the suite could be reconnected to the upper. It's on a almost quarter-acre lot in the Maplewood area. So, and price is, I don't actually have that in front of me. I think 1.150.
50.
Thank you. Some nice outbuildings as well, and a lane to the backyard. So if you've got trucks or a lot of boats and toys, it's a good property for that kind of thing. I've got 2 great listings coming up, but I can't speak about them because they're more than 3 days away. So we can't talk about those publicly yet due to the new rules. Those are fun rules. Definitely got lots of buyers looking for, townhouse in the West Shore, looking for a great home in Oak Bay still, looking for a home that's in a walkable neighborhood under 1.4 with a suite or 1.15 without. Oh man, what else have I got? I need investment properties. I need single family homes. I need a really nice condo.
I've got a really nice condo for sale on Yates, 1 bedroom, 1 bath,
Okay.
572 square feet.
Nice. I need a little bigger, and I need not in downtown core, and preferably with a view, but
Okay.
all good.
Okay, I have 2 more listings I just want to mention. One is on 3822 Trailhead in Jordan River. That's 585. It's 841 square feet, 2 bedroom, 1 bath. It's really lovely newish cabin, 2019, and it's in the forest. If you're looking for a community, it's right near the beach in Jordan River. And then we have another one up on Baird. This is a townhome kind of. It's a single family home. It's in a community of recreational properties. So great for Airbnb. And we have all the revenue statements if people are interested in having a revenue property. So that's just over 1,000 square feet, and that is 3 bedrooms, 2 baths, plus a rec room, and it has an ocean view, and it's in a great community, and you can walk to pubs and stuff like that there. Really nice. So that one is priced at $825. Alrighty, Andrew.
Wait. Jen, I'm curious. Do you have in your industry a needs and wants kind of thing, or do you just find that there's elements of the business where you find that you're like, I'd like to slot somebody in here? Is there a space for you in this conversation?
Not with houses. I mean, with mortgages, definitely. With people looking. There's so many different, I guess, similar to house. Different types of houses. There's so many different types of mortgages. But being a mortgage broker, having access to multiple lenders, I'm able to slot people in their different spots for sure.
Okay. You don't have the equivalent of our, I need this, I want this right now. I'm looking for someone who's looking for a mortgage in this category. I've got a great deal on this kind of mortgage.
Yeah. I mean, different lenders offering special rates and cash backs. Yes. Kind of thing with specials, but I'll have
maybe
to
think about bringing that for a future show. Hey, there's a certain program I want to highlight, or
for sure.
Okay.
All right.
Awesome.
Jen, how do people reach you?
Yeah, I am at 250-217-4925. My email address is j.lowe@dominionlending.ca, and website is jenlowe.ca.
And she's also on TikTok.
I am, yes.
Nice.
Okay, Andrew, how do people reach you?
Yeah, give me a call, 250-360-6106. Email is info@andrewplank.com. and the website, andrewplank.com. I'm on Instagram under plankandrew.
All right, you guys. And if you want to reach me, I'm Jane Johnston. I'm with the Bar Hill Group at Remax Mosin. My number is 250-744-0775. And you can reach me on my email at briarhillgroup@gmail.com or visit my website at briarhillgroup.com. We also have these shows and more at victoriarealestateshow.com, and you can follow me on Instagram at realtyteacher_remax_Victoria, and our team is at Briar Hill Group. And I just want to say, if you are, please come and visit us next week on Thursday at 9:30. Andrew will be hosting the show with Jen, and we'll be talking about the market update. So thank you, everybody. Take care. Have a great week.
Thanks, everyone. Thanks, Jen. Thanks, Jane.
Okay.
Thanks, everyone. See you next week.
Bye.
Bye.